Hey guys, welcome to the Passive Investing Made Simple Bootcamp. Today's topic, we're going to cover Operator Vetting 101. So how can you choose the right partners for your investment? Now, if you've never joined me for one of these boot camps before, you're in the right place if you want to learn how to turn your active income and savings into long-term passive income and wealth. But maybe you've tried investing passively before, but just couldn't quite get comfortable with making the investment, or you've actually invested in a deal before and went, oops, I made a mistake. Or you're simply a passive investor already who's looking to sharpen your skills. If this is you, you're in the right place. Now, before we dive into today's topic, just a little bit about me. I am a passive investor just like you are. I started off investing in 2002 as an active real estate investor. I invested into single family rentals, and then eventually over the past few years have partnered in over $800 million in residential real estate. I've in commercial real estate, and then I fixed and flipped over $5 million in real estate. And now, currently, I am the Director of Investor Education here at PassiveInvesting.com, where I get to work with you as the limited partner to not only understand what passive investing is, but to build the mindset, the skills, and the network in order to be a successful passive investor. And I work with investors individually at ashwealth.com. And then I've documented my journey in my book, Money for Tomorrow, How to Build and Protect Generational Wealth, which I published last year with Bigger Pockets. Now, you may have already also seen me on our other two shows, which is our Passive Investing Made Simple Masterclass, a weekly show that we do every week to help you learn the ins and outs of passive investing, as well as our Multifamily Investor Nation show. Now, all this is to say that I've scaled not only the active real estate portfolio, but in addition to this 800 million in active real estate, I've also scaled a passive real estate portfolio that has allowed me to have 100% control and choice on how I spend my time. Now, here's the thing. I work, but I spend my time with you because this is what I want to do. This is what I love doing, is giving back to this community. And I want you to experience what I've experienced. And we can actually, help you do that. Again, here's my book, Money for Tomorrow, where I've documented that journey, but we can help you build this type of portfolio at PassiveInvesting.com. We currently have 1.5 billion assets under management across 5 asset classes. $400 million deployed through our fix and flip real estate fund, which if you guys have been listening to me over the past few months, debt investing right now in this time in the market is where it's at. We're recording this in April of 2025. But most importantly, we have over 800 active investors in our deals. Now, you can join me at passiveinvestingwithwhitney.com. There, you're going to get priority access to our open deals, a one-on-one call with me to understand your investing goals and how our investments can align with those goals, as well as weekly education and resources. Now, we're going to talk about operator vetting today. So this isn't financial advice, legal advice, or tax advice. So make sure that you take any webinar, any blog you read, all that information back to your investment team before making a decision. All right, before we can actually understand how to vet an operator, we need to understand the relationship between the operator or the general partner or sponsor of a deal versus the limited partner, the investor. Okay, now this relationship goes back to what are the strengths? Why even invest passively in a deal? And why not just scale your portfolio all on your own? Why not just go figure out how to buy multifamily buildings all on your own, or self-storage or express car washes? It's because passive investing, learning how to invest in other operators' businesses, gives you massive leverage. So one way you get leverage is that you can diversify across other asset classes. Okay, so maybe you only have like 500,000 or $1 million right now to deploy into passive real estate. Okay, as opposed to maybe taking that $1 million and buying your own multifamily building, you can actually take that $1 million and chop it up. Okay, break it up into multiple investments across multiple asset classes and across different layers of the capital stack. True diversification. But also the other leverage it gives you is the relationship. Because for you to go do that, to take that, whatever you have, like $1 million, to go to figure out everything about multifamily, everything about self-storage, express car washes, real estate debt, figure out all that on your own, would take a lot of time to do that. Whereas you could actually find the best general partners or operators that have the deal flow, that have the desire, have the team in place, have the ability to get these deals under contract already, and you bring the capital, okay? Right? Because you have capital to place, but maybe you don't have time or the ability or desire to go source all these deals. Maybe you are a multifamily operator and your zone of genius is in multifamily, but you see the compelling opportunity to diversify in other asset classes. Okay, this even allows our active operators to diversify outside of themselves in their portfolio. This is how I started. I was a single family and small multifamily guru. I was like, no way am I investing in other people's deals like that. But I want to invest in larger multifamily deals. I want to be in self-storage. I want to be in express car washes. I want to be in real estate debt. And by diversifying outside myself, I was able to scale my portfolio that way, which allowed me to concentrate on what I did best. Okay, maybe what you do best is your own investing, okay, your zone of genius, or maybe what your zone of genius is scaling your own active business, or maybe it's your zone of genius is being a doctor or a lawyer, a tech worker, or your own entrepreneur at a business. Okay, that's where your highest and best use of your time is. So passive investing allows us to create this leverage, okay, where we get to tap into other operators' knowledge of the strategy, knowledge of the markets, underwriting, lending, their expertise, their team they've already built, not only people to help run the deal, but also the property managers, the lenders, lawyers, accountants, and stuff. Their ability to get credit and lending, their ability to raise money from other investors, and what we get back as a limited partner is our time, okay? Because they put time into finding the deal, underwriting the deal, completing all the due diligence, and actually operating the deal. And trust me, even if you went to do this on your own, it takes a village, okay? For you to close on your own piece of real estate, you have to find a broker, a lender. Okay, maybe if you're doing a rehab, you need a construction team. Maybe if you want to be a little bit more hands-off, you need a property manager. You're going to need an insurance broker. You're going to need a lawyer. You're going to need a bookkeeper. And if you decide to sell your portfolio, you're going to need a 1031 operator. Here's the thing. That operator, that general partner, that sponsor that you're working with can bring this team to the table for you, so you don't have to go find all these puzzle pieces, right? Now, that kind of gives us an understanding of what the relationship is, how we can create this massive leverage in our portfolio. But before we invest, we need to do our own legwork, part of which is vetting the operator. But even before you vet the operator, you need to understand your own goals. Things that I do with my clients, the first question I ask them, great, you want to be in passive real estate. Do you like real estate? Do you 100% believe in it as an asset class and as an investment vehicle? And if they can't say a heck yes to this, then it needs to be a heck no. Okay? Every asset, stocks, bonds, mutual funds, REITs, it does not matter. It will have its time in the sun. It will have its time where it's under market challenges. I get it. Real estate has gone through its market challenges right now, but we're coming out the other side. Okay, real estate is an amazing vehicle. I believe in that, especially right now. We're recording this on April 8th, 2025. The stock markets are super volatile right now. Guess what? I'm sitting largely in real estate. Okay, I've had my own challenges in my portfolio, but I'm not seeing that massive volatility right now. That leads us into the next question. What do you need from your portfolio when you talk about, understanding your goals? Do you need capital preservation? Okay. Do you need to are you close to retirement? And you're like, hey, I got all my capital built. I just can't lose any. Okay. I just need to make sure it doesn't go poof on me. Do you need cash flow? Do you need a monthly paycheck coming in? Okay. This definitely are questions that we need to sit with now so we can scale the right portfolio, find the right operators to help us scale our portfolio. Do you need equity? Are you still in the accumulation phase of your portfolio? Do you need a sizable part of your portfolio to continue to grow? Do you need tax benefits? Maybe you just exited out of your own piece of real estate or sold your business and you need to offset capital gains and depreciation. Do you need to create some sort of leverage to amplify your returns in your portfolio? Do you just need to hedge inflation? Right now in today's market, we've been dealing with inflation for like what, 2.5, 3 years now. Looks like we're going to be dealing with it for a little bit longer. Real estate is amazing at hedging inflation. And then we've got diversification. Where are you in the different layers of the capital stack? Are you holding some debt layers where you're the bank? Are you holding equity layers that are going to give us the growth and the tax benefits? Okay, we want to make sure that you understand your goals and that you're taking a multi-layer approach in the capital stack as well. All right, next we need to understand your timeline. Where are you? Are you 20-something, 30-something, where you're still in the accumulation phase possibly, and you got a long time to ride out market challenges? Or are you closer to retirement where you're in the cash flow stage, meaning making sure that you don't lose a dime right now, and that it's there for whenever you want to start drawing down on it? Or are you in the transition phase, meaning you've done your accumulation, you're not quite ready to go into the cash flow phase, but you need to start, you're like 10 years from a retirement and you need to start peeling over some pieces. All right. The other thing that we need to understand before we invest and before we go find an operator is what risk are we willing to take? Okay, so when we think in terms of the capital stack, okay, the bottom layer being the debt, the base part of the triangle, that's typically the lowest risk, but possibly lowest reward position in the capital stack. But this layer typically experiences fewer losses, right? Because they're first in line should an asset need to be sold. They're like, make me whole. And if there's anything left, you guys get to go split it as the partners. Whereas I think a lot of investors like being in the upper part of the capital stack, okay, that little triangle up there, okay, because that's the highest value and the highest returns, but it's also the highest risk, meaning you got to produce enough value in that investment to where you can pay off all the debt to be able to get that nice reward at the top. But when we talk about risk, okay, first we need to understand the different layers of the capital stack. But ask yourself these questions. What would make you lose sleep at night? Okay. Is it fraud? Nobody likes fraud. Okay. We're going to insert questions into our due diligence of the operator to hopefully suss out some fraud here. I just did a webinar over Ponzi schemes. Okay. That's a great webinar to take a look at to add in some additional questions. Loss of capital, right? Challenging markets. If you're don't want to lose any sort of capital, or you don't want to make any capital calls to your investments, then, being in the equity layer, the capital stack, or being in, high risk debt might not be the place for you. Let's pick a little safer investment. Does business plan risk just keep you up at night? Maybe we don't want to be in the equity layer either. Maybe we want to be just the bank and, we underwrite the operator, we underwrite the investment, and then we're just waiting for the investment to exit. Okay. Or does, just simply reduce, pause, or suspended distributions keep you up at night? All right. These questions help us understand how much risk you're able to take in an investment. Okay. What we want to do is make sure that when you're talking to operators and understanding what investments they offer, that you're aligning that conversation with the operator with the risk that you're willing to take. Okay. So a good example of this is I've talked to investors and they say, hey, I want a 20% internal rate of return percent. I want a 20% return, but I want zero risk. If you tell me you've ever done a capital call, like, oh, no way, like, I'm not going to invest with you. Guess what? That's not aligned, right? 20% return generally comes with a lot of risk associated with it. Okay. This person, based on what they told me, they don't want pause distributions. They don't want any sort of, business plan risk, capital calls, or anything like that. They would probably be more aligned with a debt deal with something somewhere between, say 6 to 14% return. Okay, so again, that's what we call business alignment. Okay, this is a very critical phase for you as an investor to go through before you start talking to operators. All right. Now, once you understand your goals, your risk, and your timeline, okay, now we get to kind of create this funnel of operators, right? Because there are thousands of operators and general partners operating deals across the United States. Okay, or even the world, right? Maybe like you are investing internationally. There are so many people that are doing deals, but which ones are right for you? Just because there's millions of people doing deals doesn't mean you should invest with everybody. So we're going to kind of create this funnel. Now, I call this operator funnel, if in 4 stages. One, we're going to have our pre-call vetting stage, okay, where we're kind of like taking all these possibilities and narrowing them down super fast. Then we're going to start narrowing them down further in our vetting stage, and then our post-vetting stage, and then we're going to get to our decision phase. Are we investing with them or not? Okay. So what does the pre-vetting stage look like? Well, this is really finding operators. This is the biggest stage that you're going to probably do the biggest amount of legwork in, I would imagine, okay? Because you need to find the operator that aligns with you, right? It may, in some cases, feel like somewhat like finding a needle in a haystack, but I'm going to give you some pointers here. Ways to find great operators that align with you is simply starting to tap your investor network. Why? Is because one, those are going to be very personal referrals, but we tend to invest people similar to ourselves. Okay, so we're going to share some values with them, maybe not identical values, okay, but some values together. And there's going to be some inherent trust built in there on that referral. Okay, that would be the first place I go. Who are you investing with? Second level, I would kind of go out a little bit further, is like go to high level conferences that you want to attend where high quality operators are. And I'm not just talking about any conference, I'm talking really high level conferences. Okay, that way you can look operators in the eye, shake their hand, have a chance to sit down and meet with them, get to see them talk on stage, maybe go to dinner with them. Okay, you get to build a relationship with them in a very short time. And, there's nothing like looking somebody in the whites of their eyes and to give you a feeling of who they are. Okay, then you can join investment groups. Now, LFI is now Passive Pockets. You've got GoBundance, we got Boulder Investment Group, we've got Long Angle, Tennies. There's a lot of investment groups out there. I like this as a place to gather a list of operators. I do not necessarily like these groups as a way of vetting operators. Because what we sometimes have happen in these investment groups is what we call echo chamber or group think. And it can cut both ways. A great operator can get completely trashed, or a not great operator can be lifted up on a pedestal. So more often than not, we see really decent operators surface and we see bad operators, get weeded out of these groups. But again, remember, this is group think. These are social media channels. Okay, so treat them as such, but they have value. They have value. And the two ways they have value is one, it's a great way to start getting an initial list. And two, it's a great place to ask questions and connect with your tribe. That group is not your tribe. It's the tribe that you create within the group. That's your tribe. Okay. Number 4, Google search. Okay, one of my least favorite ways to find operators is through a Google search, because anybody can have an amazing website. There are even gurus, I'm putting this in air quotes for those people who are listening on the podcast, gurus who will actually take they sell AI generated websites for people who have never operated a deal before or raised capital in a deal before ever. But these websites look amazing. I've taken a look at a few of them. They're really hard to suss out from other groups that are really, been operating in the business a really long time. Okay, but it is a great way to start kind of like getting some initial information to put on your list. Number 5, social media. Okay, social media, I don't think is a great place to find an operator. I think it's quite frankly, really horrible place to find an operator. Okay, but I think it is a great tool to get in relationship with an operator. Meaning, if you already have a short list of operators that you want to dive in further on and get to know, they're going to put out their personality on social media. Okay, so cool. Let's follow that personality. But again, people can only, they're talking to you in like 30-second or 90-second bites. Okay, what you want is to foster a conversation with them. Okay, we're going to get to that here in a second. But I wanted to get you, some pro tips, a couple that I've already talked about already. Make sure you attend investor-specific conferences, not just general real estate ones. Be wary of high social media presences without any substance, and then be wary of these AI-created operator websites. Okay, there are a lot of them out there. That's kind of a red flag. All right, now we're getting into the pre-vetting homework. So we're still in stage number 1. Okay, this is where we're going through and taking all that information, that list that we've created, and we're doing a little pre-work, right? It's kind of like going to the doctor and they send you all the paperwork for you to fill out beforehand. Okay, this is what we're doing. We're doing the pre-work beforehand. Okay, so first thing that low-hanging fruit is review their website. Make sure you have some sort of alignment with them, right? If you are looking for debt deals and all they do is equity, okay, keep them on a list. They're not for you right now, but as your goals change, maybe they will be. Okay, when you're concentrating on building equity in your portfolio, okay, build a relationship with them over time, but concentrate on what you need right now. Number 2, set up a call with the operator. Okay, so go through their website, make sure that you got some high level alignment. Okay, you understand what asset classes they're in, what markets they're in, that you've got some general alignment on the goals. Then set up a call. Do not skip this step. Okay, I don't care if you're a new operator who has millions of dollars in your pocket, or if you are a seasoned operator and you feel like you can pick apart a website in under like 5 minutes, okay, and know exactly what you're investing in. Please do not skip this part. Set up a call with the operations team. Get to know them, right? It is a two-way conversation. You're going to get so much information out of that call. And then once you sign up for the call, this is where the operations team is getting to know you. They're sending you information about what they invest in, the markets, okay? Hopefully all that is on their website, but they'll probably do some deeper education and nurturing with you. Read those emails before you get on the call, because you'll be able to ask some really intelligent questions. Now, pro tip here, always do your own due diligence. Even if your sibling has invested with this operator before and they've done all the due diligence under the sun, okay, make sure that you do your own due diligence to reconfirm everything that your family member or your friend has given you. Okay, make sure you do that before you write the check. All right, so what are some things that we're looking for here? What makes a great operator? Okay, if we're going through all this information before we get on the call with them, like what makes a great operator? So essentially, between the pre-vetting information and then the vetting call, we're looking for full cycle experience. We're looking for team stability. We're looking for transparent communication. We're looking to make sure that there's investor alignment, meaning not only do they align their deals to their investors' benefit, okay, that way everybody makes money together, but also that they align with your goals and risk and timeline. And that we also are looking for adaptability for when deals go off plan. Okay, it's not a matter of if a deal will go sideways or south, it's a matter of when. Who is that person when the going gets tough? We want to know that. So on the call, okay, we're actually on the call now, we're vetting them. Okay, questions that we need to ask the general partner. Okay, maybe you're talking to the actual managing partner or the operator itself, or maybe you're talking to somebody on their director of investor relations team or investor relations team, I should say. Um, really, let's start with kind of like your gut. Do you like them? Okay, do they seem genuine, authentic, transparent, honest? Okay. Again, we're going to be in relationship with them as partners for years, potentially 3, 5, 7, maybe even 10 years. Okay. We need to have a good working relationship with them. What is their background? Okay. How many syndications have they done? How many deals have they taken full cycle? Okay. What are all those questions that would give you an insight into their background, their track record, and their experience? What's their typical investment strategy? Okay. And how does it align with your goals or with what you need? What are their major risks of their investment strategy? Now, I always ask this question because I want the general partner telling me what the business risks are. Okay. In every investment, I don't even care if you got cash sitting in the bank, there's a risk to that. It's called inflation. Okay. Your bank could collapse, right? And there's risk to everything, okay? But what are the major risks with the investment strategy and what kind of lending do they use? I want them telling me that. That way I can double check, trust but verify. Who's on their team? Okay, what's everybody's role? Who's managing the asset on the deal? Okay, this is a great differentiating question. I want to dig in here because I want to understand if I'm working with the operator, the person who's running the investment, or am I working with a co-GP or who is actually just raising capital and doing a couple other minor roles with the investment? There's nothing wrong investing with a co-GP, right? Because co-GPs, we've covered this in other master classes, they bring their own benefits to deals and deal access potentially as well. But how it aligns with your goals, okay? Do you want to, talk to the person who's actually running the deal, or, do you have a different, way of accessing that deal? What is their communication plan? Okay, are they emailing you comprehensive reporting on a monthly basis and financial reporting on a quarterly basis? When are they issuing their K1s? Okay, that's the tax document that you get for most passive deals. Another question is, what does their waterfall look like? Okay, meaning who gets paid what and when? What fees are they adding to the deal? Do they insert a general partner or a GP catch-up, a general partner catch-up into the deal? This could help you understand if you're aligned with them or not. Other questions to ask: have you ever had a deal go sideways? Now, I asked that question verbatim. Have you ever had a deal go sideways? Why? It's because if I ask the question, have you ever lost investor money? That general partner can say no until they actually have to sell a deal at a loss. Whereas if I ask the deal, have you ever had an asset go sideways? Okay, and I can expand pause distributions, capital calls, right? That now I'm sussing out like kind of the nuances. I'm not looking for perfection here. Okay, we've had a very challenging market in the past 2.5 years. I'm looking for the person who can actually meet those challenges and head on and is transparent and honest with the investor and navigate the environment. Okay. And then I want to know if there's any red flags present. Now, guys, this is not an exhaustive list, but this gets you like 85–90% of the way there for sure on our vetting. Now, when I say, are any of my red flags present, I'm specifically looking for 8 things. Okay, this is taken from an article that one of our managing partners, Dan Handford, wrote. Am I only investing with one managing partner? Okay, if that's the case, what happens if that managing partner wins the lottery and decides to run off with, no longer operate, or heaven forbid gets hit by a bus? Who's managing the asset? Are the partners, hopefully more than one, unrelated to, are they full-time in their business? Okay, if they're not full-time in their business, that's a red flag for me, because now they've got competing priorities with, say, like their day job. Now, every operator has to start somewhere. Totally get it. Okay, but most people here that I'm talking to are accredited investors. We get, just know you have a choice. I'm empowering you to have a choice. Number three, they have no track record. They're super new at this deal. Now, here's the thing. If you're just starting out as an operator, if I'm talking to somebody who's a new operator, okay, that's cool. But do they have somebody on their team that has a background, knowledge, and expertise? Okay. It's not to say that I can't invest with a new operator. I want somebody on the team to have that track record. Are they an active participant in the deal? Okay. I want to make sure that they are operating the deal. Okay, that they're not just, passively co-investing in a deal. I want to make sure that they are actually hands-on on that deal. Okay, are they hands-on in the asset management? Do they have a full-time operations team in place? Okay, and are they seasoned? Have they operated in this space before? Number six, are they co-investing in the deal? If they're not co-investing in the deal, that's a red flag for me. Okay, it means we may not necessarily be aligned. Now, here's the thing. New operators may not be able to co-invest in the deal, right? Especially if it's on a hot market and there's tons of deals around, they may be like financially strapped. We want to see some sort of other financial alignment there. Okay, number seven, are they underwriting a refinance into the pro forma for the deal? Meaning, does the deals only succeed because they have to go get bank financing in 3 years to pull money out of the deal and give it back to you? Okay, now that's a red flag. All right. Now I can actually get the underwriting and I can remove the refinance from the underwriting. And if this deal still works, cool. If the deal now does not work after I remove that line item for the refinance, red flag. Okay. Number eight, are they using improper use of debt? Okay. So meaning, are they like not matching the debt with the type of investment? Are they trying to take a stabilized asset and put 6-month adjustable rate construction debt financing on the property and crossing their fingers that the interest rates are going to drop in 6 months and that the deal will now work because they have to get the lower interest rate debt? Okay. Again, we have choices, but that, if anything, the last 3 years has taught us, we want to see good debt with good deals. And number 7 and 8, we're going to dive into some of these other red flags in a little bit more detail. There are questioning and vetting process, but to suss out red flags, number 7 and 8, those are deal specific red flags. And we'll dive into those further in the next couple months when we talk about vetting deals. All right, so we went through our pre-vetting stage, our vetting stage. Now we get off the phone call, we've got all this information, we've taken our notes, okay, we've got a spreadsheet, we're tracking, we're asking all the operators the same questions so we can compare apples to apples. Now it's time for post-call vetting and then decision-making. So the post-call vetting stage, essentially what we're doing is we're going through all this information, sitting with it, digesting it, okay, looking at what they sent us. If we had any questions on the call, the operator probably sent you, or the operations team probably sent you some information. We're digesting it and we're continuing to ask follow-up questions, okay, to get everything answered. Okay, don't be so quick to move through this post-call vetting stage just to get into an investment. Okay, you can kind of vet an investment while you're getting the wrapping up operator vetting, but don't skip this. Okay, make sure that you get all your questions answered. I always encourage people, if you've got the time, this is a really, really good idea to find other investors that have invested with this operator before and ask them their opinion. Okay, here's the thing. Once you reviewed all the information, if you need to schedule another call, reach out to the team. Okay, even asking for another call could be a really good clue on how they work with their investors. All right, stage number 4, making a decision. Okay, so you've gone through this pre-vetting stage, the vetting stage, the post-vetting stage with this operator. Okay, now maybe they don't have a deal open. Okay, maybe your decision is just, did their email stay in my inbox? Okay, or do I just need to, are we not aligned and we're not a good fit? Okay, in that case, it doesn't matter if you're not aligned and you're not a good fit, get that, unsubscribe from the email list, right? Get off the email list, okay? So delete, defer, or engage. So either we need to get off the email list because we're not a good fit, Or maybe it's just not the right time, meaning that we're continuing to build the relationship with them, like read their emails. I have a hard and fast rule for myself that I will, with a new operator, I wait a certain time period before I start investing with them. Okay. I want to make sure that I'm cool, level-headed before I write a check. Okay. And then engage. Okay. If I'm going to engage, again, this is a great place if I haven't done so already, talk to some referrals, look them up on, online and see what kind of reviews they get. All right. Now, most of this information is geared for the newer operator, or not operator, but the newer limited partner, meaning that you are just refining, creating your systems. Okay. But maybe you're a seasoned operator and you're refining your systems. Hopefully you've gotten a lot of value here. But even as a not seasoned operator, guys, seasoned limited partner, but maybe you are a seasoned limited partner, I want to encourage you, you need to revet an operator if some of these signs appear. Okay. Meaning you need to go in and kind of regrade them. Okay. Number one, if we see leadership or team changes. Okay. And I'm not talking about like an investor relations consultant leaves, or like, somebody, one of the underwriter leaves. I mean, like one of the managing partners changes. Okay. Something's happening at the greater level. Okay. Even if they're bringing a partner in. Okay. There was 2 partners. Now there's a 3rd. Okay, something in the leadership, team changes, it's a great time to push pause, do a quick revet, make sure everything's still aligned before you continue to invest. Another time to revet is, this is more tangible to the deal than it is the operator, but like if it's a new asset class or they're employing a new strategy, quick reset. Are we all aligned before we move forward? Okay. If you see any sort of reduction in transparency, communication, all of a sudden you're not getting the financial statements that you've been getting. Investor relations is taking, they used to respond to you in a couple of days and now it's taking weeks to get back to you. There's just reduced in transparency, reduced in inconsistent communication. This is a time for a revet for sure. And then if you're just seeing performance issues. Now, this is not that there's been a market issue or a market downturn, okay, something outside of the operator's control, and they're responding to it. I mean, they've let the ball drop. And maybe I'll talk about one of my investments. It was a 52-unit apartment building. I was one of a handful of 4 joint venture partners on the deal. And one of the property managers was signing fake leases. Okay, that's a performance issue. Okay, so now that's something that we were touching directly. But if you see something like that at the within the operations team, this is time for a revet too. All right, guys, today we've been talking about operator vetting 101. Okay, if you're looking for the 201 vetting, this is where you move into how to avoid bad operators and Ponzi schemes. You can find that on our passive investing YouTube channel. So youtube.com/passive investing DOTCOM. You can look for that masterclass. But today we're talking about the 101 level. So meaning we're going to pre-call vet them, where we're creating a list of operators, reviewing their website, setting up that investor call. We're vetting the operator, meaning we're reviewing the onboarding information, taking all the notes on our calls and reviewing the notes. Then we're making our post-call vetting, okay, where we are reviewing the information, asking our questions, and scheduling a follow-up call if needed. And then decision stage. Are we aligned with the operator and we're going to engage? Are we not aligned and we're going to get off their list? Okay, or if we're somewhere in between. Guys, thank you so much for joining me today. This is your invitation to join the Passive Investing Club. You can go to passiveinvestingwithwhitney.com. There you're going to get priority access to our deals, one-on-one call information for one-on-one call to discuss your investing goals, and weekly educational masterclasses and resources.